Welcome to today's call. Obviously, it's a Thursday tech, or I guess it's not tech. Sorry, I'm thinking about the morning call here. It's a technical training, I guess you could call it. So today we're actually going to be diving into profit and loss statements, and then talking about the 70-30 rule. Is anybody familiar with either one of those? Either the 70-30 rule or a profit and loss statement?
30% of hard work should give you 70% of income.
Okay, so that is a great example. That's the 80-20 rule, however. So the 70-30 rule is a bit different. I'm going to get into that. Actually, I'm going to get into that right now. So let me share my screen here. Desktop. Okay. So the first photo I want to share with you guys here is this here. The rich invest their money and spend what is left. The poor spend their money and invest what is left. Okay. What does that mean to you guys?
Sorry, what does that mean to us, Mike, you said?
Yep. What does that mean to you?
To me, that just means that when you usually get paid, you pay yourself first, and much you buy assets to help generate money down the road, and whatever's left over, you spend on anything like going out, anything you want, versus things that you're looking more in need, like assets, looking to acquire them over a period of time.
Exactly, right? So the invest will take their money and they're going to, the rich, I said invest, the rich will invest their money in order to make them have more money in the future. And whatever's left from the investing side of things, they'll use to live their life, right? And that's how this 70-30 rule actually came to be. So there's a book called The Richest Man in Babylon. Has anybody ever read that book before?
On my list.
Yeah, you have?
It's on my list. I've read some other ones, Rich Dad, Poor Dad, but it's on my list.
Oh, it's on your list. Okay, great. So The Richest Man in Babylon, I think, is the earliest that this principle came to be. I just want to highlight the chat there. Tony said, we live outside our means sometimes. Exactly, right? So the key of this is that a lot of people actually live outside and beyond what they can afford, right? Everybody wants that brand new car. Everybody wants that brand new iPhone, the fancy dinners that cost hundreds of dollars. Everybody wants the best of everything. However, the best of everything costs a lot of money, right? So there's a gentleman by the name of Jim Rohn. He's actually the guy that said this quote. That's his name right there. You guys can see my screen, right? Or can you see it or no? I don't know what it's showing. It doesn't show the typical things. Okay, let me try to redo that. Okay, yeah, I think you can see my screen. Hopefully you can.
Yes, we can.
You can. Okay, great. So the next biggest thing, so he came out, he read the book, The Richest Man in Babylon, and he took a principle that he learned in that book and he brought it into his seminar. So he was a motivational speaker and he would do seminars all the time and he would talk about this stuff. And that principle was the 70-30 principle. So I'm actually just going to scoot this over here. Okay, so this is the 70-30 rule. So after you pay your fair share of taxes, 70% of what you have left is going to go towards spending on your necessities and luxuries, okay? So let's say, for example, you make $1. What are you going to do with that $1? Well, you're going to follow this exact pattern. So 70 cents of that $1 or 70% is going to go towards feeding yourself, your shelter, your home, whether it be renting or your mortgage payment, taking care of your everyday needs. So whatever it is that you need to do in your world has to come from that 70%. Of what's the remaining amount, the 30 cents, you're going to break it up into 10 cents. So 10% each. So 10%, he advises you to go to charity. So it's up to you, obviously, at the end of the day. Some people don't donate to charity. Some people do. It's completely up to you what you decide to do with that 10%. Now you can use that 10% and add it on to one of the other two 10% and have it, 70, essentially 20, 10, but that is completely up to you. So 10% should go to charity. Of that, the next 10%, so the next 10 cents is used to create wealth. So capital investment, okay? So the best way to understand this is use that 10 cents to buy a product, fix that product, and then resell that product. right? So you're taking that product, you're adding value to it, and then you're selling it off for a profit, and you're making money off of that profit. Okay. And the last 10% should be savings, right? This is money that you're going to allocate towards savings. No matter what you do, you're always going to have 10% of your money go to a savings account or an investment account where you are just saving for the future. Okay. Does everybody understand that principle? The 70, 10, 10, and 10 principle. 70-30 principle, you could call it. Yes, no, maybe so. Okay.
Yes.
The next thing I want to look at with this is, some people aren't aware of this, but believe it or not, there is a like a math out there that states that if you're looking to buy a home, you should be able to, like, after tax, your income, 30% of your income should cover the cost of your living expenses. Okay. So if your living expenses are more than 30% of your income, your year-to-year income, then you have a big problem. And it's going to be a lot harder for you to save money in the future because you're essentially in debt to your home, right? And you're going to go through that whole process of having to try to save your way out of that. So if you go with that principle in mind, you should be okay, right? And keeping that in mind, that 70% is spent on necessities and luxuries. So 30% of that, right, is going to go towards housing. So that gives you another 40% to live off of food and off of, you want to go to the mall, you want to go shopping, you want to go on a vacation, all that comes out of your 70%. So if you made $100,000 this year, $70,000, sorry, let me rephrase that. If you made $100,000 after tax, $70,000 is going to be directed towards your living expenses. And your literally everything in your life should be in that. Your car payment, insurance payments, everything should be in that 70%. If it is not, you want to try to target it to be. Okay. If you're less than that, good for you. You're just you live below your means, essentially, which is great. If you're more, you live above your means, right? That's essentially what it means. Okay. So now I'm going to kind of jump towards the next thing I want to talk about. So I'm going to get rid of this. And we're going to go towards the P&L statement. Okay. So before we jump to this, I want to talk about profit and loss to begin with. So I'm going to stop sharing my screen here. Does anybody know what profit and loss is? And if they do, I would love it if you could come on the mic and talk about it. Tell us what it is. If I was 5 years old, how would you explain it to me? Okay. I'm going to assume because nobody's speaking up that nobody knows what it is, correct? All right. I'll dive into it then. So essentially, profit and loss is at the end of each month or the end of the year or weekly or daily, whatever you want to look at. How much money have you spent and how much money have you made? Okay. And your profit and loss statement is going to show you that, yes, you're either making profit or you're not making profit and you're actually taking a loss. And the only way to successfully do that is to know exactly what you spend, to know all of your expenses, and to know exactly how much money you've made. Okay. So in our resource folder, we have an example of a profit and loss spreadsheet, which is here, blank P&L sample. Okay. This is a great example of you guys to know exactly how much your business costs you on a yearly basis. In this statement here, we have it done on a monthly basis. Okay. And we have as many things as we could possibly add on here that we could think of. If there's some that are missing, feel free to add them in. Okay. And it's going through all of your stuff. So let's say travel expenses. So, we spent $200 on gas. Whoops. $200 on gas this month, right? Sign installations. We installed 2 signs that cost us $60. Let's call it. Virtual tours. We did that cost us $150 this month. MPAC, we bought 5 MPAC reports. So that's $25. Marketing, we also spent $25 at marketing. Google AdWords, we spent $10. Domain and website costs. So how much does my website cost monthly? This one's actually $70. First sale sign / riders. If we bought any this month, we didn't end up buying any this month, so we're okay there. Facebook ads. We actually just did Google ads, so we didn't spend any on that. Agent locator, maybe that's another 25 bucks. Top producer, we have command, so we don't need that. Staging costs. We did a staging consult, 150. Okay. Flowers. Anybody buy flowers? I didn't buy any flowers this month. Maybe I should have. My girlfriend might want that. DocuSign, we use Authentisign, so we don't pay for that. Google Suite, that's 20 bucks a month easily. Office supplies, yeah, we maybe bought paper, pens, maybe ink. I'm going to say roughly 20 bucks this month we bought in office supplies, some folders and stuff. Open house supplies and marketing, let's give it another 15er. Status certificates, we didn't sell any condos this month, so that's 0. Lock boxes, if we bought any, you can add them in here. Let's say we bought one for our listing, so that's 35. KW Realty Centers, our monthly fee is about $100. Adobe Creative Cloud, so we have Adobe programs, so that's another 50 bucks a month. Audible, that's easily 15. Client gifts, we had one closing this month, so we spent $100 on that. Training events and education. We didn't take any training this month, or our training is a part of our PC program, which is covered by the office. Thank you very much. Office rent, so that's another 550. Client lunches, dinner events. So we probably spent another 200 bucks on that. And it's going to sum it up. So right there, does everybody see this? Oh, sorry, hang on, I lost everybody here. Let me come back over here, bring you.
Yes, we see it.
You see it? Amazing. Okay. So this month, the month of January, costs you $1,800. But we're not quite done our car expenses yet. 407, we didn't take. Parking, we didn't have to pay for. Gas, we covered up top. That's our traveling expenses. Our lease payment was another 400 bucks a month. Ubers, we didn't take any, thankfully. Maintenance, we had an oil change for 65 bucks. Okay. Banking expenses, do we have a banking fee? Some of those are 10 bucks. Credit card interest, whatever that is. I luckily have 0. Credit card fees, we're going to say, what, 10 bucks on a monthly average. Actually, my credit card's 0, so hopefully your guys are the same. We also have our TREB dues due in the month of January, so that's like 500. RICO, nothing. Insurance, nothing. CRA installments. If we have any installments, maybe that's like 10,000. Okay, actually, I'm going to leave that out for now because that's not everybody. So we're going to leave that one 0. Okay, now let's look at our monthly income. So right now we know, actually, let me do the income first. So let's say we close one home at $1 million. So our commission was 25,000. And we had a split. So we're roughly like, let's call it $17,000. Okay.
Mike, could you tell in 2 words, what is CRA installments?
CRA installments, yeah, for sure. So every year when you do your taxes, if you owe more than $3,000 at the end of the year, I think it's 3,000, it's either that or 2,000, the CRA, the Canadian Revenue Agency, will come to you and they will say, we want our money, right? And you will then pay them. And
Okay.
going forward, they're going to ask for their money up front because they don't trust salespeople to wait till the end of the year and to pay them. So what essentially has happened is, some people will owe the CRA $40,000, $50,000 at the end of the year because we have to set aside our own taxes, right?
Mhm.
So the CRA knows that some people don't plan their money very responsibly and they use their government, they use their tax money to buy stuff.
Okay, got it. Thank you.
So the CRA says, okay, give me $10,000 every 3 months. And at the end of the year, we'll give you back any difference that we owe you, right?
Yeah.
Okay, so now we know this. We have all of our stuff in here. And now let's take a look. So the total expenses is 1,800. Our additional expenses is 465. And then we have another little 10 bucks here and there, $500. So this is going to sum up everything for us. And now the difference, actually, what's this down here? House expenses. Oh yeah, here you go. This is pretty cool. So you can even add on your house expenses that you need, right? So this is including everything in your life that you possibly need. And now what we got to see is we got to know what the difference is. Just make sure there's nothing yet. So now our income, how do I do a formula with this? That minus that minus that minus that minus that. Oops. Okay, so our profit in the month of January was $14,205, right? Does everybody understand how I got to that number? Speak now or?
Yes.
Okay. So that is just subtracting. It's just the difference, right? Now, this is the important thing. Let's say our life was a little bit more expensive. Or 500 there. Actually, let's say we're 1,000 there because we drive a fancy sports car and gas is expensive. And we did, sign installation. A couple of these things are, start to get out of hand. We spent $1,000 on marketing. We spent 500 on Google ads. We did Facebook ads too. Even though we have command, we pay top producer $300 a month too. Agent locator, we're up to $300 a month. DocuSign, we pay for it even though we don't need to. Google Suite, we have 3 accounts open, but we only use 1, so we're going to pay $50. Office supplies, we're crazy with our office. Client gifts, we went over the top and bought them a gift for $500. Training events, we took $1,000 in training. Client lunches, we really indulged here. So we spent $750 on dinners and lunches and all that good stuff. Okay, we took the 407 like it's our job. Parking, we paid $50 everywhere we went. I'm gonna add a gas expense, $400 a month. Lease, we drive a really nice car, so our lease payments minimum $1,500 a month for sure. And the maintenance on that car is roughly $100 a month. And we actually are in debt, so we pay credit card interest of $200 a month. And yeah, so the month of January, now we only made 7,000, right? We only changed a couple categories by a couple $100. But when you start to change those categories, it starts to add up and it starts to get out of hand, right? And there comes a point where if we only made, let's call it, whoops, I did not mean to do that. If we only made 10,000, then we only made $55, right? Or better yet, just to add a number in there, we lost money, right? So even though we made $10,000, we actually lost money. So you figure that, right? At what point, why are we in the business if we're in the business to lose money, right? Everyone can probably agree that we're in the business to make money, correct? Anybody? You guys are quiet today. So we're in the business to make money, right? And it's super hard to keep track of all this stuff. But if you use this document to help you understand where your money is going, you're going to get a better idea as to how much money you're spending on a monthly basis. And you should review this on a monthly basis. Does anybody currently do that right now? I'm going to assume if you're quiet, you don't do it.
I'm
Right?
doing it, but I have my own forms, not this one.
Okay. And so how often do you do it?
Almost every 2 weeks.
Every 2 weeks. That's amazing. Okay. And have you found yourself that every so often you have to make an adjustment?
Of course.
Yeah. Right. And that's challenging because at times you're going to have to say, okay, yeah, right now it's a little bit tighter than normally is. I can't afford to do this, or hello, sorry for coming late. No worries. Thanks for joining us. It can be very tricky. It can be very costly on you and your family, right? Because at the end of the day, you still have on top of all of this stuff that I just went through, you still have your house expenses on top of this to go through, right? You still have to eat food and, pay your car insurance and your TV bill and your internet and your Netflix account and your Disney Plus account, all these accounts that we have, right? So we need to know on a monthly basis, how much it costs us to live our lives. And once we know that, we know what we can make in a year. So if I know that roughly this is what I spend on a monthly basis, I can add this up to a yearly basis. Okay, so let's say every month I spend the same thing. Okay, I now know that in order for me to live my best life, the life that I want to live, it's going to cost me $84,000 a year. So I need to make at minimum $84,000 next year tax-free in order for me to live the life that I want to live, right? Does that make sense, everybody?
It's amazing.
It's cool, right? It's neat to see.
It is.
And I would challenge you to do this for yourself and do it this afternoon. See what your business cost you last month. Get out your credit card statements and go through every single thing that you've purchased last month and put it on here and keep track of it. And I bet you'd be blown away, right? Because some months you're going to be negative, which is fine. It happens. As long as you have more months that are positive than you do that are negative, right? And those positive months make up for the negative months. Because then at the end of the year, you're going to be profitable. But if we're not profitable, then we're in it for the wrong thing and we're doing the wrong thing. So the next thing I want to talk about is, let me just grab this book here. This is the fancy little book. Everybody read this book yet? Millionaire Real Estate Agent. The red book, as they call it. So I'm going to stop sharing my screen here. Okay. So in this book, I'm exhausted today. Anybody else tired or what? Is it just me or does it feel like Friday?
It feels like Monday.
Feels like Monday?
Yeah.
I agree. It feels like Monday.
Okay.
Weather, Mike, weather.
Yeah, to me, it feels like Friday. I just want to go to sleep. I'm exhausted. Okay, so in this book, if you have it in front of you, fantastic. If you don't, note this down for next week, or not next week, sorry, for the next time you're in front of the book. That way you can take a look at it. Page 193, okay? It is the budgeting model of a real estate agent. So this is what it looks like. Everybody see that okay? So this model, actually, I got a note on this. Hang on one second. Let me open that up. Can save you guys some time and some headache later. Okay, cool. Here you go. So this is the budget model. Okay. Basically, what the budget model says is for every dollar that I'm going to make, a certain amount of that money is going to go to the operating expenses. A certain amount of that is going to go towards profit for the owner that's taking risk. And of the operating expenses, where does that money look? Where's that money going? Okay. This is the number one most important thing when it comes to spending money in your business, because it's easy to make money and have it, but then how do we allocate it to the right areas and the right spots? So let's break it down. Let's say we make $10,000 in GCI. Okay. We know, based on the models and systems in place and that KW teaches about, that roughly 60% of our income, so 30% will go towards cost of sales and 30% will go towards operating expenses breakdown. So we're going to lose on average about 60% towards all of that good stuff. Okay. We're then going to have profit, which is what's going to be left. And of that leftover profit is what we're going to pay taxes upon. And then we're going to have our net, of course. So on $10,000, I should be netting $2,000. Keep in mind, this is for a millionaire real estate agent. As a solo agent, your net will be a lot higher because you won't have as many expenses in the operating expenses. So your operating expenses might be 10 to 15%. Okay. But if you want to really scale your business, this is the maximum you should be spending on it. Okay. So we have operating expenses, roughly $3,000 going towards our operating expenses. So how does that get broken down? Let's look down here at the operating expenses. So roughly 11% is going to go towards salaries. Okay. Now that could be paying for an admin. It could be paying for yourself. Whatever it is, 11% of it is going to go towards that. That's the highest category. Okay. The next highest category is lead generation. So $1,000 of that 10,000 is going to go back towards lead generating. Okay. So whether it be Facebook ads, door knocking hangers, postcards you sent out to neighborhoods, whatever the cost is, even your Mojo dialer, whatever the cost is, $1,000 is going to go back towards lead generating to get new business. Okay. Then you have an occupancy, technology. So your phone bill, actually, sorry, I have phone down there. Technology, your computer, anything else, you're going to associate $220 per year to that. Sorry, per the $10,000 towards that. Supplies, education / dues, equipment, auto insurance, and that is the total amount. Okay. So overall, that's going to go towards running your business. Okay. Now your cost of sales is going to break down as your cap, right? So every deal that you do, you know, we have to pay 30% to our brokerage or 20% to our brokerage, depending on your capping system or your capping model. So that is, you can't change that. That's always going to be there. Once you've capped, you're golden, but that's always going to be there. Now, if we want to break it down further into the lead generation breakdown, this is what I have. So I have it split upon 4 different ways. We have cold calling, door knocking, social media database. So for every $1,000 that we make, which comes from this number here, this is how much is going to be spent on the following items. Okay. Now let's add a 0 here and see how it changes the numbers. Okay. So now 11,000 is going towards salaries. Lead generation, $10,000 is going towards lead generation, right? So think about what you can do now that you're spending, $2,500 on door knocking, $2,500 on social media ads, $2,500 on a database, right? That's going to get us to a bigger number. Does everybody kind of understand that? And why the budgeting model is so important to you and to your business? Yes, no, maybe so.
So what you're saying, if you earn more money, you have to spend more money to elevate your business, right?
Yeah.
Okay, then when you start to make more money?
When you start to make more money?
Yeah.
Well, you got to spend money to make money. That's the thing, right? So as long as you are taking that money and responsibly putting it back and investing in your business, then you will, yes, on average, start to make more money for sure.
Interesting.
Just want to take a look at this for 1 second. This is the cost to generate leads and run the business. Key categories here are salaries, 12%, lead generation, 9.2%. Okay. Yeah. Now, if I look at this, so they have this here as yeah, so it'd be the same, yeah. Craziness. What questions do you guys have? Okay. We need to invest each month on our business to make money. Is that right? Yeah, 100%, right? So we can do a couple of things. With the income that we make, we can do a couple things. Number one, we can take that income and we can go buy a fancy new car. Or we could buy real estate, or we could buy whatever it is that we want to buy, right? However, the downfall to that is in the event that we want to continue running a big business, we're going to have to invest in that business. So at some point, we're going to have to stop treating ourselves and stop buying these fancy things and fancy dinners and fancy cars and just stick with investing in our business, right? So for some of us, that could be as simple as a website. It could be as simple as running some social media ads. That way that we can actually, you know, start to market ourselves and build our name and get out there so we can have more money coming in. Because the purpose of marketing, does anybody know the true purpose of marketing? What would you guys say the true purpose of marketing is? Number one reason why companies market.
To promote business.
To what, sorry?
To promote business and earn more clients.
Yeah. So like, let me ask you this, you know, does Coca-Cola need to advertise?
I believe so. You cannot advertise just 50 years ago and stop. You constantly should show what you are on the same page with today, and to attract new generation and all constantly. Maybe not as much as 50 years ago, but it should be constantly injection in marketing.
Yeah. So Coca-Cola, you know, they don't really need to advertise because we know Coke product, but they choose to advertise because they're building their name and they're continuing to build their name, right? So they're building a brand and they're reinforcing it every single time you see an advertisement. They're reinforcing the brand, right? We're not at that stage yet. We can't do that. So we have to advertise to build our name right now, just to get out there and to really start so that people can start to see us. But once they start to see us, then we start to build our name for reputation and solidify our brand name, right? And stay top of mind for everybody. But it's absolutely important that we take some of the money that we make and we reinvest it in our business that way, right? Investing it into our systems, you know, an administrator, possibly somebody to actually do the work. Well, not do the work for us. I shouldn't say it that way. To do the paperwork side of things for us. So we can focus on doing what matters to us. And that's, you know, buying and selling real estate, right? Talking to clients, being on the phone with clients. I make the most amount of money when I'm on the phone with clients and I'm talking to clients and being with the prospects, right? I can't make money when I'm uploading documents to Command, right? I don't make money doing that. Command doesn't pay me for that. Keller Williams doesn't pay me for that. I get paid when I talk to clients and I convert clients. So as early as I possibly can get to the point where I can only spend my time talking to clients, it's going to be better for me, right? Does anybody have any questions? They want to come off mute, or you want to throw them up in the chat? We can talk about them quickly. No questions? Okay, not a problem at all. This pretty much sums up exactly what it is that I want to talk about today, and going over, you know, the budgeting model of our industry, how to properly use the 70-30 plan to ensure that it's the right fit for you and that it's going to help you save money in the future and help you become more financially free. And then on top of that, how to properly, you know, look at the numbers on a monthly basis of your P&L, understanding your profit and loss system. That way, you know exactly how much money you're making each month and what you can do with that extra money, right? Because once we have that money in hand, we can go and invest it in other things and we can do the things that we want to do. Like, for example, does anybody here want to share their big why, the reason why they're in business? Tony, I see your comment there. So it's actually in the resource folder in your coaching program, in your coaching folder. Unless you're talking about the document I just talked about, but the budgeting one, the P&L is on the resource folder.
I don't have it either.
What's that?
I don't have it either. From the morning, Dylan already emailed me because I didn't have it. And this one I don't have either.
Do you have the resource folder? So, okay, let me share my screen
Yes,
here.
I do, but I don't have this budget Excel.
It's called the P&L.
Yeah.
So hang on, let me find it for you guys. So it's called blank P&L sample. You should be able to look it up here. So you type in blank. Oh, maybe you can't. Let me go to the coaching folder. Okay, well, regardless, it's just down here. So you just scroll down, scroll down.
It's usually by alphabet.
Yeah. Where did I, profit and loss spreadsheet right here. Profit and loss spreadsheet, blank P&L sample.
Thank you.
No problem. Okay, so somebody share with me their big why. I am in business to be financially free. Okay, Tony, thank you so much. I appreciate you sharing that. So this is a great example, right? You're in business to be financially free. In order to be financially free, you have to be financially literate, right? You have to understand where your money's going. You have to understand what you're spending your money on. And in order to do that, you have to stay on top of your P&L, right? And then you have to use the excess money that you have to invest in your business and help it grow and kind of use money as the fuel. There was a great quote by Simon Sinek about the use of money, right? So money is like fuel. It's like gasoline to a car, right? You use it to put gas in the car and drive, right? The purpose of gas is to get a car to go somewhere, right? The purpose of money is to do the same thing. It's to help us get to that next spot. It's not to, I don't know how I want to talk about it. It's essentially to help us get to the next step in our business and to our personal lives, get us closer to the goals that we set out for ourselves, right? So if you want to be financially free, money is going to help you get there, but you got to spend that money properly. So if you just went to the gas station, filled up a jerry can and put it in your trunk and expected your car to go, you're not going to go anywhere because it's not in the gas. You know, you're not filling your car with gas. You're just filling a jerry can, right? So in order to go somewhere, you got to fill your car with gas. And your car in this instance is your brain, right? So you have to understand how to properly use money and take the excess money you have in order to fuel or fund your business and your personal life, right?
It's a great analogy.
If you guys don't have any questions, that pretty much sums up everything I wanted to talk about. I'll stick around for about 5 minutes to see if anybody has any questions, but if not, you're free to go. Thank you for joining today's call. I appreciate it.